Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It is the 20th. So today's going to be a short stream because I have to go at 8:30. So it'll only be about a 2-hour stream. Actually, it'll only be like an hour stream because I have to be there by 8:30. So let's get into it, though. We have an interesting market. So yesterday, we started down after that huge decline going into the close and off of coronavirus and all that. And now, yesterday, they started to go pretty wild on the upside after headlines about stimulus talks restarting, although I personally am not too hopeful for the stimulus actually getting done. With the Georgia runoffs, still in the future, I think that they're going to continue to play games. But then after that, and going into the close in the pre-market, news came out that the Treasury Secretary has requested that unused funds for these certain programs be returned back to the Treasury. And the Federal Reserve was quite upset about that. So the market declined. Now, here in the overnight session, we've been rising since then. I didn't really see a specific reason for that. It looks like that Brexit is not really going anywhere, so I'm not really 100% sure. But anyways, that's kind of what we've got going here. So on the treasuries here, you can see treasuries moved considerably higher off of all of that news, interestingly enough. Oh, you would think that being more responsible should decrease the interest rate. So we move up. Cool. All right. And then oil. Oh, we need to roll over oil, don't we? Roll over. Yep. It is time. Okay, there's your oil. Oil edging a little bit higher, actually higher than yesterday, interestingly enough. Gold still kind of looking a little sad there, but not moving a ton, actually, these past few days. Copper pushing higher, though. That's interesting. I wonder if there has been some liquidity injected. Let's see here. News Squawk. They always say stuff at the top there about Asia with how much. Let's see here. Reports China's bond market regulator plans to conduct investigations on lenders involved on the bond issuance of the state-owned coal miner, which recently defaulted. JGB's eked mild gains amid the underperformance in Japanese stocks and strengthened T-notes after the Treasury asked for its funds back, but with upside capped amid the enhanced liquidity action. People's Bank of China injected $80 billion via a 7-day reverse repo at a rate of 2.2% for a net daily drain of $80 billion. So that doesn't really explain it either. Businesses in China are more optimistic and expect more stable bilateral relations under a Biden administration, according to a report citing a survey by the American Chamber of Commerce in Shanghai. Maybe that's it. Well, anyways, that's what we got going. Oh, yeah, we should also check. We got the dollar. So yesterday, the dollar was rising quite a bit, and then it dropped by quite a bit. Pretty funny. The euro moving off of all of that. Oh, man. Okay, so the way that the currencies are going, that's quite a mess. And the treasuries, well, the treasuries could come back. It kind of depends on how big of a deal they think this all is. And then, well, today for US news, we don't have a whole lot. We got Canadian numbers. We've got Canadian numbers, but we don't really have any US numbers. We've got Fed's Kaplan is going to be speaking here. Where is that? That one's not listed. I heard my squawk say that they were doing that, though. Let's go look at Forex Factory and see if they have it listed. 7:30 a.m. So when the market opens is when we get that. In other news, we hit 4,000 subscribers last night, so yay us. I think channel's still got a ways to go. There's still a lot of stuff that I want to share with you guys. I honestly, well, I don't know if I'm going to be making a whole lot of videos next week. Brandon says thanks. Yeah, I want to make a bunch of videos next week because I'm not going to be working, but I might have, bandages stuck up my nose, so I don't know if that's happening or not. But I've got a video on, well, I have some data on Bollinger Bands that I should be able to get to you guys now that we've fixed all of the memory issues. And I think there's a couple of videos that we can do with the chalkboard. We can start getting more into market microstructure, which is really, started out as our specialty, right? So, yeah. But I think I'm supposed to have bandages in my nostrils, so that wouldn't make a very, very good video. I have a big list. I wrote it down in this thing, so. But I don't know if the market looks pretty dead. We're up pretty high. I'm thinking that I should be. I never tested that issue. I was having an issue with one of my indicators yesterday, and I never went and looked at it again to try and figure out what was wrong with that. I could try changing the time frame on this chart to see if I can get that data point to come back up. But did something happen over here? Why is this? It's not showing me the cost basis on this bottom indicator. Well, they're both loading. There we go. That's a little better. Okay, so somebody had asked me a question, so I think we should do some research for them first. He wants to move the stop after the strategy has taken it manually, and at the end of every bar it modifies it. And so I'm wondering how you deal with that. Strategy move, stop manually. Please tell me the difference between options and futures. Wow, they're so different. So an option is the choice or option to buy or sell something at a specified price, or giving the option to somebody else to buy or sell something at a specific price. A future is really a contract to provide a service or buy a service at a specific date, but it's just the contract. You can buy or sell the contract. And so future basically just becomes a way of trading something on leverage. For instance, S&P 500 futures, it's a leveraged. Over here in the micros, it's $1.25 per tick or $5 a point. And if I buy it here and it goes up, then I make $5. And if I sell it and it goes down, I make $5 or lose $5 or vice versa. And that's a future. Whereas on an option, it's like at a specific price. You buy and sell it at a specific price, and how far it moves from that specific price. And you can buy a bunch of different options together to manage your risk a certain way. And very, very different. Here we go. I have a strategy that says how it stops in the initialize session. I want to be able to manually override the settings during the trade. It keeps resetting back to the automated settings upon each bar. That is exactly the problem. Are you calling set stop loss anywhere in on bar update? If so, these are likely resetting the stop loss. Maybe we see the code. Yes, I am setting it in the on bar update. That's what they're saying. It may be that the condition to enter a position is being triggered on each new bar. Oh, that's a good point. That's probably what this guy's issue is. I bet you that's what his issue is. Man, so I am going for surgery today, and I am not allowed to drink any water now, and I am already feeling kind of thirsty. Mars, it's New Baton. Oh, how are you? How have you been? I haven't really been paying attention to Discord very well this week, to be honest. You know, it's just been such a grind. And you know what I find so frustrating about this market? I complain too much, first of all, about it. I've been complaining about this market a lot. It's been a tough market. But if we come back to the volume profile, like, look at it. Okay. Yesterday, let's go to Monday. Monday, pretty tight. And then after we leave, big move down, big move up. Badoosh. Okay, this was all in. Oh, actually, we're looking at the HG. It's on the wrong one. Okay, so here you go. Pretty tight while we're trading. And then big move later. Here yesterday. Really tight while we're trading. Big move. So it's like while we are trading when the volume is all there, it can't go anywhere. And in fact, the volume is actually a little bit light. And then later in the day, they do all of the movement, or overnight. So it's a little frustrating. Are you going in for no? Doing the deviated septum, fixing the deviated septum. Oh man, I'm getting a lot of there's a certain number of spam that always gets posted on every video for some reason. Oh, we should respond to this guy over here too. What is the name of that method? There's the Canadian data.
Block cell.
Oh, on state change. That's right. Like, I think that's wrong. Let me come back over here. Okay. There's that one. Spam, 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 spam. Report. Okay. Good. All right. Well, the Canadian numbers that just came out month over month, better than expected. New housing price index better than last month, but new housing price index month over month is slightly worse than expected, spot A versus 1%. And we are seeing the E-mini sell off of that, curiously enough, and the Treasury is moving back down here. What do you think? That's extremely interesting. Dollar moving up. You still believe in the rotation trade, Gary? I don't think that they're reacting to the Canadian news either. I mean, like, I'm looking there. I see the numbers and everything. They didn't move until after that news was released, but I don't see why that should be affecting us. Actually, we did move down a little bit before that, didn't we? Yeah. It seems like this move happened before that. Now, let's see here. I always felt we would slip into a recession in October 2020 regardless of COVID. But okay, so that comment confuses me, because isn't the whole rotation into value trade based more on the idea that we're going to get vaccine and that the economy is truly going to recover, and that the upside from these stocks that were benefiting from the pandemic is going to flip around? I thought that was the case for the COVID trade, which doesn't necessarily suggest a recession. Nor does it suggest anything on interest rates per se. Well, actually, take that back. It seems to me that with the value trade that we could see the interest rates rise a little bit. But what's happening right now is we're seeing the interest rate rise and the S&P 500 is coming down a bit. I guess that move isn't significant in the S&P 500, but when I look at it in the treasuries, it seems like a big deal to me. Well, you know what? The other thing is that the 15.5 isn't pulling. See, they want it. I bet you that we did that. I bet you it'd be really hard to get filled there. Oh, there you go. Maybe it will fill. Okay.
Gary Rich says the per-session talk came back in early 2019, which until a slowdown rotation didn't fully come like now.
Yeah, I can't really say what would have happened if we hadn't had COVID, you know? Like, it sure seemed like the financial situation was not what it should have been, and that we were a little frustrated about the way that the markets were reacting to the fundamentals, and that the market should be down, but that they just kept buying and buying and buying. But I guess we now know that we were getting all of the SoftBank stuff, and that was maybe a factor behind all of that. So, you know, this is the thing that again, I find people don't factor in, and it is the reflexivity principle from Soros, right? That like something will happen and the market will react in a certain way because that's what the participants think. And because that's what the participants think, you know, the market moves in a certain way and it becomes self-reinforcing. People think, well, because I traded and I made money off of it, I'm right. And, you know, what happens is sometimes they have to face the music. That's not the reality. Sometimes the reality wins. And I totally see where I think at some point the reality would have had to have won if it wasn't not for coronavirus, you know? Even without COVID, we still would slip into recession. How deep it would be was unknown. Yeah, and that was the other thing is I remember talking about this and thinking, well, I bet you that we'll have a recession at some point. We're kind of due for it, but that it doesn't necessarily have to be a bad one. Now, the interesting thing off of that, I think, has been when we, at the end of all of this, how bad do we view the COVID recession? Because right now the market seems to be saying that, you know, it was like a 6-month thing and then it's over and that everything will be hunky-dory from here, which I don't buy at all. I think that there's going to be a lot of damage done to the market that will linger around for a long time that investors are discounting too much, you know? Like just the way that the valuation for some of these companies is so high, it's hard to make money when you've paid up that much. And you know, all of these millennials that have gotten into stocks lately, bought the dip, and really driving these valuations. I think that they're going to get really frustrated when the yield curve inverted in late 20. I don't believe that part. The yield curve was a tell to a recession 18 to 24 months. Yeah. I mean, that's a good theory and all, but I don't think that we have enough data to know. The way that the yield curve was at the time was conducive towards it flattening like that. And I'm not and there's no evidence that the yield curve and that it was that particular time that's really what would happen. Studies prove this. Now, there's studies out there that show the correlation between the yield curve inverting in recessions, but I think that the economic conditions now are very different. This is an important one to think about. though, because surely interest rates will be low for a very, very long time. I mean, it took us 10 years to really get interest rates anywhere reasonably up. And now I'm wondering if it won't be 20 or 30 years before there's actually real interest rates. Are we going to ever see real interest rates the rest of our lives? I wonder sometimes. And okay, so that is interesting. I don't think you're any smarter than the Janet Yellen. I'm just, you know what, Gary? I'm really tired of you coming in and anytime that you have an argument and you can't come up with a good counter to the things that we're saying, that you just say, trust me, I know what I'm talking about. The least effective argument you could ever use here amongst a bunch of traders is, I know what you're talking about. You might know what you're talking about, but Janet Yellen disagrees with you, right? So come up with a real argument and stop this authority bullshit, because you're just a random person on the internet to us still, even though we appreciate you being around and we respect you. But I don't just take everything that you say on faith. And there are many very, very smart people out there that disagree. And I think that Janet Yellen's position that the interest rates were already really low, and because of the negative carry and everything else like that, the interest rates were very likely to invert anyways, and that wasn't necessarily predicting anything, is a really good argument that counters what you're saying. Now there's the other argument, which is that the the inverted yield curve causes the recession, but we don't have any proof that that's what would have happened this time, because it ended it before anything happened. And so because of coronavirus, I actually really find it frustrating, because I was excited to see what was going to happen. And we never got to see it because of coronavirus. All right. AM Trades, hi, how are you? Is he a gold? I don't know if he's a gold bug, but he does seem to be on the world is going to fall apart side of things. Whereas you notice I'm almost always on the side of, well, things aren't as bad as we think they are, which is almost always the case, right? I mean, at the depths of the coronavirus, things weren't as bad as we thought they were. That whole thing is kind of, that is another interesting thing. I don't know what I should do next time in a situation like that, because I was looking there at the coronavirus and I was like, well, I don't think that this has to be so bad. And then it was so bad, and I didn't really take advantage of it when it was going down. Probably it was better that I just kind of stayed out of all of that action, but still. Okay. And another thing is I just don't like it. Insulting the whole channel. Come on. I maybe I shouldn't have done that. I was thinking I was just a little upset about him saying that, but I only put him in timeout for a few minutes. It's fine. Do you think the NQ is going to rebound? Oh, I'm not so sure about that one. Let's come over here and look at that on more of a long time frame, shall we? So when I look at NQ over here in this chart, You can definitely see the rotation, right? Here's the E-mini, made a new high. Here's the NQ. Never really got past this high back in August. Or was it September? I guess it was at the beginning of September. The Fed and Treasury will have conversations. There's a lot of work to do, says Evans. I just tested negative even though I had all the systems there freaking me out. Oh, really? Like, how bad of sick are you, though? So I've had a number of instances where me or somebody in my family had all of the symptoms, and then we go and you get tested, and they said, "Nah, you don't have antibodies, you don't have anything." And I'm like, okay, I think I have it, but apparently I don't. I even did the antibody study because I thought I caught it in January. You know what I mean? That was a really awful cold. I'm starting to become concerned about how bad will my health be when I get a lot older and I get sick. Because I don't get sick very often, and I tend to think of myself as having a pretty solid immune system because I work out so much and everything. But it seems like when I do get sick, then I'm just out of it. E-Trader says, so what's happening between the Fed and Treasury? You keep hearing them in Bloomberg. Okay, so there are a number of programs that the Federal Reserve has been administrating using money that came from the Treasury. And yesterday, the Treasury asked for that money back because the Federal Reserve hadn't used it. It was like they set the program up from what was allowed, but people only used up like half of the funds that were allocated to them. And they want to use the rest of the funds, but I guess they can't, or people aren't using it. And so they want Congress to, put out more stimulus and change things so that they can continue to allow them to administrate that program. And they asked for the funds back. So when they asked for the funds back, the Federal Reserve was like, no, we want to keep it. So the Federal Reserve is still concerned about propping up the economy, I guess. And it's been affecting the markets for sure. I mean, that move into the close yesterday was something else. Well, I don't know if it was something else. I didn't really watch it, but it was quite a bit of movement yesterday. Oh, you want to call me? Oh, I didn't see. Mm-hmm. I didn't see Gary was trying to do it again, Gary. Didn't see that at all. I caught a good excursion there, but they did not fill me at 16.5. What instruments are on your screen? So these 3 DOMs here on the right are the 5, 10, and 30-year Treasury, and then these 2 are the S&P 500 futures and the micro futures. See, I'm a little concerned by like that. Like, it seems like somebody wants to push it down. The market maker doesn't seem to believe them, but after that, maybe they will. I'm kind of thinking, though, that I don't want to mess with them anymore. Okay, they let us out. I bet you I was not the only market maker there at 15.5 that decided to do that. Because 30,000 traded there. You say it's going to 20, then 28. Well, what is it right now? I haven't looked today. Oh, it's still within that range. Well, you know what? They always tend to like to do those things on the weekend. So let's see where we're at on Monday. I don't know if Gary's still there. I think I missed it. We missed an opportunity to do something fun. So let's see where they go from here. I kind of have a sneaking suspicion that they're still going to come back up. But okay, so they, yeah. I think that somebody is pretty adamant about that holding for some reason. Seth, when you say trade the news, what do you mean by that? Data or the economic calendar? So let me try to be more specific. Specific is maybe not the right word, but let me try and present a more detailed philosophy in terms of how I believe you should try to find edge in the market. There are really three forms of edge. They are discovery of information, analysis of the information, and execution on the trade based on that information. Okay. All three of those things have to do, are related to one key point, and that is information, right? Trading is taking information and then using that information to make decisions. Well, I guess all of investing in and participating in capital markets is of that nature, but trading is doing it on a short time frame, right? So when we trade, we want to be trading off of an informational asymmetry. And that is, we know something that we believe that the majority of the market doesn't know. So that really could be anything, right? Theoretically, if you know a certain tendency in the market, you could take advantage of it and make money off of it, right? The issue with that, from a retail trading perspective, is that a lot of those informational asymmetries that we try to trade off of are really, really small. Like, I've been trying to find some sort of a short-term edge that tells me with a 70% probability, that a spot is going to hold at least for 2 ticks or something like that, A trade of that nature would really help me out a lot, because we have some really significant edges in terms of knowing where the market is going to go to, but we have a hard time finding an area to take advantage of it the best. It seems like that what will happen is our entries are kind of random. You will struggle it out quite a bit, and then eventually we get the runner that goes to our spot. You know what I mean? So the whole point there is that technical edges, there's not a whole lot left there. Probably the market has arbitraged almost all of that asymmetrical information out because of the robots. So if that's the case, then we have to start to look elsewhere for informational asymmetry. Now, is that informational asymmetry lie in economic news? Well, I think that in some instances it can, but usually not. Usually there are traders out there that they have ways of looking at, existing public information and using that to estimate what the actual number is going to be. That's how these analysts come up with their estimates. And maybe you have a system of estimating it that is better than the analysts, and you can predict what's going to happen before it comes out, and you can trade that. Or you could, insider trading is true too, but I don't want to use the word insider trading because that's illegal. But we can acquire public information that the majority of the market hasn't noticed, right? But the way that you do those sorts of things is you're going to have to do things that the majority of participants aren't doing. You're going to have to be digging into data sources that most people aren't looking at. You're going to have to do a detailed analysis that most people aren't sophisticated enough to do. So one thing, you know what, Gary, I did that because I felt like you were kind of being insulting the audience. I don't know if maybe you were just kind of doing that in jest, but I felt like it was getting a little out of control. If you call me on Discord, I will let you talk. I didn't see it the first time. Now I see it now. I have it open. So if you go back and do it, let's go. Just don't be mean to the audience, okay? And I can ask you questions to clarify what you're saying, but I will totally let you have your say. Anyways, back to the news. So there are definitely some situations. Really good example was when we had that jobs report. Remember we had that jobs report and it was like crazy beyond what any of the analyst expectations were. And like we were expecting that it could be that the analysts were likely to be wrong, but not on the positive side and to that extent. And that was a day where you could have looked at the positioning of the market if you understood market positioning and you understood the significance of the move, you could have bought it and held it all day. And so there was an informational asymmetry. And the informational asymmetry that you have is the ability to understand the significance of that news faster than the rest of the market can. Okay, so it can come from economic news. I think that more often it will come in the form of breaking news. You get this breaking news that like the robots don't understand how to trade it, and it like reverses, or it comes out and the market doesn't move initially on it, but then it moves later. Those sorts of things. I think that those are some of the ones that you're looking for. Insider trading has an advantage over your regular news trader. Probably true. Yeah. But in any event, the goal is always going to be find informational asymmetry. I think Gary might be delayed again or something because I'm not seeing him pop up on Discord. But we'll wait. We got 30 minutes. We got 30 minutes. I got to get going in about 30 minutes. 30, 40 minutes. I mean, we'll watch the first little bit of the open. Okay, there he is right there. Can you hear me? Yeah, I think you can hear me. I see your mic shows it's muted right now, Gary. Yeah, now I can hear you. Okay, so first thing is, can you just go into your user settings under where is it? Voice and video, and just adjust the voice activity, because it looks like it's cutting you off just a little bit too quick. I can hear you, but it was cutting you off a little bit too quick. Yeah, I think so. So, well, man, I thought that you were already going to come in and you were going to have like a big long rant that you wanted to share. You can talk about anything you want, but if you don't have a specific thing that you want to rant about, then I have a subject that we would talk about. Oh, by the way, can you guys hear him? I don't think you can hear him. I need to do that. And there we go. Now say something. Okay, hold on a second. How do I do this? Like just keep talking. I need sound to be able to figure it out. Oh, that is so annoying. Why is it not? Okay, let's see here. User settings, voice and video. Oh, it's outputting to the focus rate. So we should have it output to, which one is it? We should have it output to desktop audio 1, which is the aux input. Okay. Now try. Still there? There we go. Now they can hear you.
Okay, what would you like to talk about?
So.
Well, wait. Stop.
Okay.
Okay. When the yield curve inverted, it is predicted 7 at the last.
Oh man, you are.
Janet Yellen says.
You're right on that. I felt that they had a.
Why do you argue? Why do you argue with me?
Well,
I'm trying to help and assist you, but you argue with me all the time.
It's my nature, I guess.
Well, you know what you really look like? You kind of look like a prick.
I am a prick.
You look like a prick.
Knock it off. I admit to being a prick and an asshole. So tell me this. What if you were to share an edge, or not even necessarily an edge, but like an avenue of investigation that you would think would be the most beneficial either to me or to the audience, what do you think it would be?
Be more specific.
Oh man, you're going out, cutting in and out. Go back and change the input sensitivity. Just put it like all the way down. Oh, they're enjoying listening. That was better. So say it again.
You are generalizing. Be more specific, because that's a generalization.
Okay, what do you mean? Expand on that.
Well, what do you want to know? Macro, economics, monetary policy, interest rate policy, gold, silver, mining, stocks, healthcare, industrials, oil and gas. I mean, come on. That's such a
So,
general question. That's like asking, why is the sky blue? That's a general question.
okay, sure. The problem that I feel I have right now is that I think I have a pretty good idea of where it's going to go, but I have a very difficult time finding when it's going to do it or where the right place and time is to play it. So I'm trying to find things that can help me position myself better on very short-term trades.
Okay. I thought about this. Okay.
Okay.
Now, I'm going to say this. When I first found you back in late 2017, okay,
Yep.
you were calm, cool, and collected, and you articulated markets well, and you spoke eloquently at times.
Oh,
You
thank you
remember
so
those
much.
days? Okay.
Yes, I do
Now,
remember. I think I know
wait.
exactly what you're talking about.
Okay, now I'm gonna crap on you.
Okay.
You went tits up, tits down, and something flipped on you in
Mm-hmm.
June of 2018. Now, I could speculate why, but I'm not gonna out it. But I will say this, okay? You only have 180 minutes to trade in a day, correct?
Right.
Okay. Now, I would recommend you only take 6 trades in that time. That's one every half hour.
Okay, I agree with that. Yeah. You know what? I think I keep that's something that I say that I should do, but then when I'm in the moment, I forget about it. But we can focus on that more and we can change that. So I'm with you so far.
Okay. Now, what you're looking for is a signal or alert, signal, setup, signal. The signal, you have to have a secondary confirmation of a signal. Now, what is that? That could be technical, that could be strategy. Okay. Because if you
Right.
look at all your trades, you tend to over trade and you're trying to call the tops and the bottoms. And you're going to
Definitely
fail
in
at
the
that every
E-mini
time.
too. Yeah.
Okay. It's not that hard, Seth. You have to be disciplined not to take a trade. You have to be disciplined to sit on your hands and wait. That's what discipline is about.
Okay. So let me ask it to see if I understand correctly what you're talking about. So I remember, well, I don't completely remember what happened was it summer of 2018? I think it was. I think that summer of 2018 was the summer that was just absolutely awful, awful, awful. Because I remember it was like early 2018, I did really, really well. And then I did poorly. And I kind of had gone through and I'd gone through different cycles. And I feel like each cycle I get better. But the thing that I remember doing a lot back then, and maybe this is what you're talking about, is that I was talking a lot about what I was seeing on the DOM. And I would talk it through a lot. And I kind of switched away from talking about the market microstructure stuff as much. Is that kind of what you were getting at?
Yeah, that's true.
Okay. I feel like, I don't know. I think part of that has been because I feel like I understand what I'm seeing on the DOM in the 10-year treasury pretty well. Like, I feel like I correctly saw there just this morning that there's something going on at 15 and I wasn't necessarily want to mess around with that area anymore. When I watch it in the E-mini, it's like it's just a different beast, you know? And I think that might be part of the issue.
But here's the thing, since March, correlations they don't correlate anymore.
Yeah, totally.
Okay? And just like when you talk about PMI, CPIs, have you run a spreadsheet analysis on the year over year, quarter over quarter changes? They're pointing down. They're pointing down. You know?
Sorry, when you
I mean,
mean they're pointing down, you mean that inflation is not coming in as strongly anymore, right?
Yeah, they're deflating quarter over quarter, year over year. They're not producing the same numbers as 2018 and 2019 numbers.
That's true.
So what does
Okay.
that mean? Okay, so think about the vaccine. Until we get a vaccine, these numbers are going to be bad. We've troughed at the bottom in March and we've risen since. So everyone goes, look, it's good, it's good, it's good. But think about, how do we get back to the highs again? How do we get back there? Right?
You mean to like the September highs?
I'm talking about 2019, 2018 highs on CPIs, PPIs,
Oh, okay,
CPIs,
okay,
and
okay, okay.
PCE. This is macro. This is
Yeah,
macro.
yeah, yeah. Okay, okay. I don't know if we're ever going to get back there, to be honest with you. I feel like that we're going to see. Uh, I'm still of the opinion that I'm more concerned about deflation, and that we won't get that for a long, long time, or if we do, that it will like spiral out of control.
No, that's not necessarily true. Once we get a vaccine, which will probably be in June or maybe towards the end of the year, then we'll get back to work, but it'll be a slow recovery. Okay,
Hmm.
so what does that do to earnings until then? Look at the markets. Look at the Nasdaq, the S&P, Nas Y or Dow. Look at the Russells. Okay,
Okay.
look at the big three. Do you notice how they top? They hit the top and they come back. What's the theme right now being driven? Vaccine, vaccine.
Right.
I
Right.
mentioned between now and February, the big five are going to come out with their trials and studies. Okay. Now, there's vaccines waiting to go. They just has to be approved and fast track. Okay.
Right. Correct.
Okay. So until then, what are you going to see? You're going to see massive layoffs. Look at the numbers the other day. Look at the number of job firings. That's increasing. It's not decreasing. Okay. That's
Okay.
deflationary. That's
Yes.
deflationary. Now, look at the 10-year. Okay, look at the 210 spread. Okay, look,
Well,
that thing
let's pull
keeps
it up.
rising and rising and rising. Okay, now it traded back down because why? Because the 10-year is anchored. It's anchored in a range
Yes.
between 100 basis points and roughly, call it, yeah, I think it topped at a low of 31 basis points. Okay, everybody's going out into the yield curve on the back end, the 30-year.
Yes.
Why do I say that? Johnson and Johnson and Apple sold debt, 30-year debt at what, 240 basis points or something? Yeah.
Okay.
Nobody
So hold
subs
up. So you just told me a piece of information that I had not heard. Where did you learn that from?
I saw it on Bloomberg.
Okay. Okay.
Yeah.
It was just Bloomberg. Then I guess I just missed it. Continue.
What I'm saying is this market has challenges. Okay.
For sure. For sure.
Okay, look at the earnings revisions. Look at the upgrades, downgrades. Look at the estimates. Okay. Now, NASDAQ has been leading and lifting this market, and it will lift it and drag it back down. You know,
Okay. So if I understand what you're saying correctly, I think that you're saying that in the next 2 quarters that you expect to see the major indexes on a roughly downward trajectory.
that's possible. It could be like a square root, right?
Sure.
We went, came up, and we just flatline. It's not perfect square root, but that's possibilities because everything is forward projected. The forward earnings, because right now, what's going on in the
Yeah.
market right now is being projected 6 months from now. So
Right.
what happens today is projected for 6 months in the future.
Hmm.
And those projections don't look, because everybody is confident and hopeful we get a vaccine and then tomorrow we go back to work. It doesn't work that way, man. It doesn't work that way.
Well, yeah, I think that based on the trajectory of the virus right now, that there's probably going to be quite a bit of drama until we get the actual vaccine.
Yeah, and we're punishing people by going into these massive lockdowns again, right?
Right.
It's poor policy. It doesn't matter who the president is. It's just poor policy being implemented. We don't have
Okay.
to lock down everybody. I mean, that's the bigger picture. Now, market wise, look at the ranges, man. Look at your market profile, value high, value low, and point of control where the most volume is. It's not that hard to scope these ranges out and take a risk. You know, you're never going to call the top. You're never going to call the bottom.
Yeah.
All you have to put your trade on, put your stop. If you get hit, you get hit. Period.
Okay. I don't know. So I was doing some back testing yesterday. Because now I have more RAM, and so I can kind of try and look at my inventory cost basis and maybe what some tendencies are for it. I tried looking at just the cross of the lines if there are some tendencies. It was actually interesting because those areas, especially those two middle lines, are like really truly random. like I was able to get a positive expectancy off of just the simple trade of trying to trade between the two lines. That worked pretty well. But like anything else that I added to it, it didn't matter. It was like, it didn't matter what the volume was, the cumulative delta, the trend at the time that it crossed, or anything. It was just everything else about it was random. It was so weird. I was like, oh, maybe I caught a good spot. Well, I'm seeing something that is like the area where like the market makers see value, essentially, right?
Wait. Let me ask you a question.
Okay.
Your cost basis, what is that data? Where are you getting that information?
Okay, so it is primarily, how would be the best way to describe this? I think without, because I don't want to give away like the whole algorithm and everything, I would say that the base data underneath is a footprint chart. Think of it like a footprint chart.
Okay.
So I'm using number of buy and sells at price, and then I'm going through a set of rules to cancel volume out, to say, okay, this volume here that was a buy at this price, that was somebody entering a position, and all of this stuff over here was them taking profits on those positions. So it's a model. It's, of course, it's not going to be accurate to everything, but it's like it's like a naive look at what it must be the position of the market makers in the market as a whole, and that's where you get it from.
And then how many price levels on the ask are you looking at, and how many price levels on the bid are you factoring in? 10 on the bid, 10 on the ask, 20, 50, 100?
Well, it's the whole, it's like one big footprint chart for the whole session. So every price that's traded, essentially.
Okay, so is that 10 price levels on the ask and 10 on the bid as an example?
It's every one that's traded, right?
Okay, so, but is that every single order, or is it only so many orders?
Every single order. Every single contract.
Okay. Now, that cost basis, how much information does that give you into looking at the Vista part of Jigsaw? Doesn't the Vista give you bigger picture than your cost basis?
Well, so
your cost basis may be a lead or a lag to give you a hint, like an alert, and the signal comes off the Vista, right?
Yeah, so I think I kind of get where you're going from, because the cost basis kind of just really all I feel that it does is it tells me where is the market's current positioning and where is the, like, they start stopping out and freaking out sort of a thing. So it is kind of like more of a higher level signal. And then I have to come into like the Vista and the order flow and everything else to find a more local signal for it. Is that kind of what you were getting at? Yeah.
Yeah, I mean, to me, all the purpose of the DOM is just telling me where liquidity is hiding. That's all it is to me.
Yeah, I know. I agree with you. Know what? I used to think that it was more. I really did. Like when you first came in, I used to think I can see a pattern here in these numbers, and based on what kind of a day it is, I can take a trade based off of that and come out with a pretty high expectancy. And I don't know, maybe that is true, but it seems to me that when I was doing that wasn't consistent enough. So now I look at it like you just said, like I literally only see that there's liquidity. So as an example, this trade that we were in earlier, I took it at 15 because I could see that the market makers were willing to hold the liquidity there and it was at the bottom of it. But then I could see that there was fairly aggressive selling into it. So I bailed out of it because I thought, well, somebody must think they know something. And now you can see they've come down like 4 ticks, but only because yeah, go ahead.
No, it's like when you figure out the expected move to the VIX, right? Same thing. If you break it down, if the expected move is 1%, that's 1% up, 1% down. Just slice those up. Slice it up into quarter, half, 0.75%, and watch and see if liquidity shows on Vista, right? Because the Vista tells you, because it's heated, and it tells you, hey, they're going to drive this down, and you have to figure out, do I take the chance now? I mean, I'll give you an example. Okay, Ace.
Okay.
Okay.
Sure.
He's pretty smart, and I'll tell you why
Yeah,
he's
he is.
smart. He always locks in 1-2 points, 1-2 points, and then he'll get a runner of 5, 10, 20 points. But he always locks in 1-2, 1-2s. Okay.
Yeah.
That's how you build your account up little by little by little and consistently. Yeah, he takes his losses. We all take losses. But that's how you build your account up. That's why I said, take 6 trades, not 24, not 14. Because look at your number of your trades. Go back and review. Where did I enter? Where did I exit? What did I do wrong? Always ask yourself, what did I do wrong? What did I do wrong? And take notes. And then look at it.
Yeah, so I don't do that. Maybe I should do that more on stream because I tell you what, I'm a little obsessive about that sort of, you know, maybe it's just like a dopamine thing. Like I think I get a little bit of a rise from looking at the numbers and keeping track of them over time. Like even like channel views, I find it really interesting to look at what the channel is doing and where people are coming from and stuff like that. And so I definitely look at my stats. I can tell you, you're definitely correct in that when I do poorly, I take a lot of trades and I take a lot of poor trades. The thing that I find happens to me often.
That's called revenge trading.
Yeah, I think I think you could call it revenge trading. Sure. I mean, sometimes it's not, but I definitely like the days where I was trading live accounts and I blew them. That was definitely revenge trading. Because what'll happen is like I'll have this move and I think something's going to happen. And I would guess, that's one thing that I should take better notes on. But I would guess that when I have like a larger term view about something that's going to happen, it probably happens 70% of the time. But I will take the trade and fail on it like 10 times before I catch it. And so when I have those bad days, I keep thinking, go ahead.
Okay, look, you can obsess until the cows come home, and all it's going to do is mentally fatigue you, okay? What you have to do is step back and look at your trades, and if you have 10 in a row losses, examine what you did wrong, okay? But don't meticulously try to refine it to where you need to get in and out second by second. Don't obsess over that, because you're going to have wins, you're going to go on streaks, and then you're going to go on loss streaks.
Yeah, for sure.
You're a compulsive person. You told us you have ADD.
I am, yes.
I'm not outing you, okay?
Yeah,
so
yeah.
You need to calm down, because this is a marathon, not a sprint. Okay. And it takes time. Like once you get past 5 years of trading, something's going to click and go, oh, and you look back and go, wow, all that stuff I did before was really stupid. Okay. But you keep that to yourself. Okay. I do
Sure.
stupid stuff all the time. And I've been
Sure.
doing this for 20 years. I've been doing this for 20 years and I still do stupid stuff. I just don't make big, stupid mistakes. Okay. But I
Gotcha.
meticulously look over my stuff and I write notes to myself. Okay. Because it's not about trying to get in at the perfect moment. That's not what it's about. And everyone says, oh, I need an edge. I need an edge. You know what the edge is? You are the edge. All these tools and software we have, they just help and assist us. That's all
Sure.
they do.
That's true.
Okay. Yeah. But what I'm trying to explain to you is, you know, you have stuff. There are a lot of people that are very smart in your chat and Discord. You could
Oh, yeah.
cultivate their ideas. Like I said, Ace is one of them. Bot's another one. RJ Will, Live Action, Uzi, Greg. Okay. There's a lot of people that are very smart. You could cultivate their ideas and put together your own puzzle, right? But now let's get into why do you really hate technical analysis? Do you really hate it? Or you don't understand it?
No, it's I think that I test a trillion different things in software and I cannot find a single trade that's based purely on technicals that I would feel confident giving to a trader with a small account. Like the ones that I do find that do have a positive expectancy, it's a profit factor of like 1.25. The one that I was testing yesterday that involves my order flow over the past 2 months was 1.5, but then over the course of a year, it was a little bit less. And maybe if I add some daily filters, that changes, but let's just assume 1.5. And then when you look at the drawdown on that, that's going to blow most retail traders' accounts, right? And so I feel that there probably was some edge in technical analysis at one point, but that the majority of the technical analysis that retail traders are trying to use, like flat out doesn't work. That they're going to lose money, almost guaranteed.
Okay, but you said it had massive drawdown. Where were the stops? Where were the stops? Were the stops 1 for 1, 2 for 1, 3 for 1, 4 for 1?
It's so. Yes. So the way that I've been testing these is I've been I mean, you can't really see my screen. By the way, I have to go in about 10 minutes. So we'll do this. I want to tell you something else, and then we should come up with like 1 or 2 things that we want to try and do after this. But what I'll do is I have a target and a stop set in the strategy. And then I can just change them and iterate and see how it changes. So I will use a stop right now in the S&P 500. I'm using a stop between 8 and 24 ticks. I found that if you go to 36, it almost never works out, at least over the past year. And below 8 is just too low. Like a 4 tick stop on any of the things that I've been doing just doesn't work out. And then the target is, a multiple of the stops. So I'm either doing, it's basically a reward factor. So I do anywhere from 1 to 3. And so I will basically test all of the combinations of those. And it comes out to like 35 different combinations. And then see what it comes out. Most of the ones that I've been trading lately, it's equal risk reward has been working the best. But
okay, wait. When you're testing that, what time frame are you testing it on?
Good question. So I can change I can actually iterate over the time frame, which is kind of interesting. But there's also these differences where it's like, if it's based on the open and close of the bar, or like the high and the low of the bar, then that's different. And then you have to change the actual like series frame. But normally what I'm doing instead is I'm saying, like, say it's a moving average, I'll just do it on a 1 minute chart and I'll just change the period of the moving average and see what period, it's curve fitting, but
I know, but if you do 3 time frame analysis, okay, so if you look at a 1 hour, a 15 minute, and a 5, okay,
yeah,
and if you look at the 1 hour and you go, okay, over the series of 2 years or 3 years, how many ticks did this 1 hour bar go up and down, high to low, close to close, open to close. That's
Yeah.
3 different data sets to run. Then that'll tell you, okay, if the 1 hour is averaging, let's say 40 ticks as an example. Then
Okay.
you go down to the 15-minute, okay? Go down to the 15-minute, and that, let's say that range is, I don't know, pick a number, 20 ticks, and then 5 is 10 ticks. What you have to do is you have to find a strategy. You're gonna have to test all kinds of things. You could use moving averages, you can use oscillators, you could use volume, but you have to have if, and, or, but qualifications. And it gets very complex, very
Yeah.
complex. You know, when your CCI is above X and all of a sudden it reverses, then you look on the price and go, oh, there's a divergence here. So it looks like they're going to push it down. You look on the DOM to see where liquidity is, where you want to enter, and you look at the Vista to verify it. See? But backtesting, you'll drive yourself nuts trying to find the perfect, the edge.
Oh, yeah, I'm sure. Although I don't feel like I've ever taken one. I don't know. I want to take this current strategy that I'm working with on the cost basis a little bit further than I normally do, wherein I'm trying to look at, you know, what happened in the overnight session, and based on what kind of day I expect it to be, I'm going to be taking different types of entries, because there's definitely a thing to, especially when you're doing order flow signals, you know, certain signals tend to go a certain way based on whether it's going to be a trending day or a range bound day or whatever it is. But yeah, so I have to say, because I gotta get.
Here, wait.
Go ahead.
Okay, last thing. Okay, here's a way to think about it. If you're looking at a 1 hour chart and you figure out what the range is bar by bar, okay, think about this. You know, in a 1 hour period or 4 hour period, think I can get 10% of that move. That's a very conservative thing to think. Anything above that, that's just pure gravy. Just think, if it moves 40 ticks, I think I can get 4 ticks. Think that way and build a strategy around that.
Sure.
See, most people think I get this range is 40 ticks, I'm going to get all 40. Well, that's a sucker's bet. That's a
Yeah.
That's it.
And always having the same stop and target. There's limitations to that. Yeah, I need to work on that a little bit more, because I've tested things about you know, adjusting stops and targets and stuff, and I haven't gotten one that I'm like super happy with yet. So first of all, I have to say I'm really glad to talk to you, because sometimes when I'm talking to you on YouTube, I'm sitting there like, is this guy just fucking with me, or like, is he? But then now I think that it is just that I have like that kind of like anxiously attached mind, and so I'm always like questioning about whether people are genuine or not. So I'm glad to talk to you.
To tell you the truth, I am screwing with you.
Okay.
To teach you a lesson.
Okay. So.
But I'm not mean spirited. I really do want you to succeed.
Okay.
Sometimes you really go off on a tangent, and I'm like, God, if I was sitting right next to you, I'd slap you on the back of the neck.
No, you're screwing with me the same way that bots does. As you're poking fun at me, and I was thinking, like, is this guy trying to gaslight me or something like that? That's what I was thinking at one point.
If I was gaslighting you, I'd get you kicked off of YouTube.
Oh, there you go. So let's see here. So it seems to me that a couple of things that maybe we can try changing for next week is, the first thing, as you were saying, is what do you think about if we only want to take like one trade every 30 minutes? What if we say, if I take a trade, I don't take another trade until it's been a certain amount of time?
Okay, here's a way to think about it. If that's 6 trades in 3 hours, you take the first one, you win. You take the second one, you win. You take the third one, it takes the second trade's profits. If you take a fourth, it takes the first one away. Stop. Don't go for 5 and 6. But if you take the first one, win, second one, win, stop. Don't take 3, 4, 5, and 6. just stop. Sit on your hands, learn to be patient, and if the market runs, let it run. Let it run. Sit on your hands and be patient. The more you build up patience and discipline, you'll just let the market do what it does, because this way you don't have this fixation like I gotta get in, gotta get in. You don't suffer that FOMO, the
Right.
FOMO, YOLO, BOLO. Yeah. See, the hardest thing to do is to sit on your hands and do nothing. That is pure patience,
So
right?
say that I come in and I take the first one and it's a loser. Um,
Okay.
my tendency would be, a minute later, try and take another trade. So
Wait for the next half hour for the
wait for the next half
signal.
hour.
Remember, alert, signal, setup, signal. You have to have an additional confirmation that says, now it's time to go. I mean,
Right.
you can anticipate where the market may go and step in, okay? And then if you're going to take a trade and it goes against you, cut it off. Kill it as fast as possible. Don't go, well, I'm going to wait. I'm going to wait. I'm wait. Kill it. Kill it.
Yeah.
Because you're
I've been
wrong.
getting
You're
more
wrong.
into that.
Yes.
Yeah. Okay. So
I
what
don't hate you, man. I don't hate you. Okay.
I
I don't hate you.
I appreciate. Gary, I have to say you've given me so many good things in the past, so I know
Okay,
I know
okay,
that.
but don't fall in love with me. Don't fall in
Yeah,
love with
okay.
me because you might crush my heart. I know I've run out.
Okay, so I was saying the wait 30 minutes after the signal is what I just wrote down. But basically the goal here is to reduce trades per day. And then the other thing
Well,
is
you could go 6 in 180 minutes, and once you get a better feel, then you could go 12, one every 15 minutes. But
I gotcha.
just think, yeah, just be
Yeah.
happy if you lock in $5, $10. Stop, be happy, okay? But also, if you're gonna take a loss, cut it fast, kill it, kill it. If you're wrong, you're wrong,
Yeah.
okay?
And then
Yeah.
the next thing that I'm writing here is adjust targets.
hmm Look at the
So
range. Look at the range, and think I can get 10% of that range of that move,
yeah,
and just settle for that, like
yeah,
Ace does. 1 2 1 2 1 2. Right?
yeah. Well, I used to do it as one of my best points periods was when I was just taking 2 points, and it was mostly off of Ace's signal with kind of like some other confirmations or filters on top of it. And then that Brexit thing happened, and I think that a lot of what happened with Brexit was that I hadn't adjusted. Like the market was moving so much bigger, and so I probably needed to have a larger stop. And I did that, but then what I've done is I've just gone to always doing 4 points instead, which is pretty good for the average market volatility. But now that things are kind of calming down again, I think that I need to do more investigation at how I should adjust that. And that's something that we can definitely backtest. So I think that those are 2 things that I can focus on next couple of weeks that would make a difference.
When you replicated Ace's thing, okay,
Mm-hmm.
I looked at that. That's a good system. That's a good
I
system.
think it's there's a spam risk. Why would a spammer call you at 7:30? Yeah, well, I don't know. It's interesting the automated Ace. Let's just say that automated Ace doesn't hold a candle to real life Ace. Real life Ace is able to see when it's not exactly fitting all of the exact qualifications, but it's still a good trade. And so he's able to take more trades. And then when you have more good trades, and then you kind of filter out the bad ones, you have a better overall system. That's one of the problems that I've been having with some of my systems, is that like the initial trigger is so rare that you don't have a large enough data set to work with once you start getting into it, So
Yeah,
I don't
but
know.
remember, you only have 3 hours, so you only have a tight window to trade. Ace has
Mm-hmm.
a luxury, like me, to trade throughout the day. So your window is very short. So his signals may come and they may come, they may not They may present themselves, they may not, because your window is very, very tight. It's only 3 hours. It's only 180 minutes.
Hmm.
That's when you get to over trading,
I
right?
don't know. I think he usually finishes before me though. Actually, I could.
That's what he said.
Yeah.
I
You
didn't throw
should.
that in.
We need to get Ace because I bet Ace would share with you. I mean, it's essentially a complicated setup with moving averages, but the key trigger is quite common actually. So, anyways, it's time for me to get going. So, thank you for coming in and talking with me. I was hoping that you'd do this like the last couple of times that we did this, and this worked out so great. And it looks like everybody in chat really enjoyed it too. So.
Well, if people want to know, just hit me up in Discord. I will help. I will assist. I will offer as much information as I can because I really want everybody to succeed. Okay.
Oh,
I don't
thank
hate
you.
you. I just like giving you crap once in a while because sometimes you really go off on a tangent.
Hey, that's totally fair because something I've found through my life is that I'm easy to make fun of, and I'm not particularly elegant at handling it because I think it's an ADHD thing, but it's okay if you enjoy that. That's great.
Hey, I self-deprecate all the time. I call myself a dummy and a retard all the time. Oh, sorry for saying that R word. I apologize.
No, you're okay. You're okay. All right, guys.
All right, well, good luck to you on
I gotta go.
on your surgery. You have a good weekend.
You too. I will see you guys all on Monday. So in the meantime, stay profitable. Now we'll end the